In this video, guys, we're going to look at an aggressive scalping strategy you can use on a 1 minute chart. Stick around. Hey traders, warm welcome to you. Thank you for joining me. Alright, so this is an advanced scalping strategy for you aggressive scalpers out there. These are the rules. This is how you do it. Now, with all things, guys, as always, take your own care of this, do your own due diligence, put your own risk parameters in place. This is an idea, a guide for you to kind of look at and go, yeah, you know what, that fits in with my style, that fits in with my strategy. I might take some of that. Or for you to go, you know what, I don't want to use any of that except this bit, or it's not for you. I'm just sharing it with you guys. If you find it valuable, thumbs up is of course appreciated. You guys are the best subscribers around. Okay, so what's the rules of this? So the idea of this is something that you're trying to get on board when like a mean reversion type play. Now, if you're a scalper, you know that actually that's more likely the occurrence with the market than kind of momentum type drives. We talk about momentum as well on YouTube as well with many of the videos. When we see there's certain parameters for that, we want to jump on for further momentum. However, under most conditions, a mean reversion type trade, i.e. when the looking for the market to be stretched. Imagine it's a spring, the spring stretches, we're looking for that kind of sweet spot there for it to contract again. We're not looking for home runs, not looking to jump on trends here like you might be with a momentum ignition type trade. You're kind of looking for that sweet spot for the reversal. And when you're scalping specifically in a 1 minute chart, something like that, whether you're trading the Dow, I've got the Dow in front of me here live, kind of chugging along, whether you're trading a currency pair, commodity, whatever it may be, maybe you can even use it in crypto. But the idea is that, you know, under these very short time frames like the 1 minute, you're trying to find that little stretch spring, contracts, bang, back in again. Expands, so I say, contracts back in. And you're closing on the contraction, looking for it to reverse. Now, obviously, you can start, so this is where you add your own flavor to things, guys. You start to add advanced things like holding and scaling and all that kind of stuff. Anyway, let's cut to the chase. What are the rules? What are we looking for? So the rules are this. Now you're followed me for a while, guys. You know I'm not a huge indicator person. I'm not huge on it. However, under certain conditions, I like to use them as a filter rather than a trigger so much, more of a filter. Okay, so what I've got on here is I have a 1 minute chart. This is the Dow. I've got a stochastics and I've got the normal stochastics 1433 on TradingView. Now below it, I have an ATR set to a 1 period. So 1 period is basically, when we're using a 1 minute chart, it's going to give me the range of that bar pretty much. When we have ATR on a daily chart, it accounts for gaps. It's not quite as accurate. But when we're trading 1 minute bar, fine. So I've got an ATR here. I've just got it set to the kind of histogram and a yellow, but it's setting on a 1. It's set on a 1. And below this, I have another ATR. This time it's set to 10, so it's a 10 minute ATR. So the idea of this scalping strategy is, okay, we want to only short in overbought conditions. So an overbought condition we define as when the stochastics are above 80. We're going to go long in an oversold condition. You know this, guys, stochastics oversold below 20. Simple rules. That just keeps us from getting involved in too much chop. Now, also, you might want to refine when you trade it. Time I'm doing this video now, coming up to 4:10 UK time. UK market's closing. Dow, okay to trade. You know, you don't want to be kind of trading it. Well, it depends. It's up to you, of course. It's entirely up to you. The open and close, you might want to avoid the really volatile times because that's when you tend to get momentum ignition, opening drive, those type of trades. You're familiar with those. You want to take it in a time where it's not completely quiet, that you're not going to get anything out of the market, but enough movement to really grab something, you know, and get those little rotations. Anyway, so we're shorting and overbought, buying and oversold. Not as simple as that. What we're trying to do is when we have the 1 period ATR, i.e. the current bar's range, if that's higher than the 10 period ATR, now we're looking to take a short. But we'll only do that as well if we have an X bar high. And for X, I'm going to say 5 bars. You can use 3 bars. So in other words, if we are at the highest point we've been for the last 5 bars, let's use 5 actually as an example here, then, and we have an overbought stochastic, and we have the ATR that is above the 10 period ATR. So in other words, you know, think about what we're saying here rather than just rules. And you know, you guys are, you know, I like to think about this. Step yourself back and think what we're doing here. We're trying to find the expansion of that spring. Where's that expansion? So when we try to find we don't know how far it's going to expand. We think about the analogy of a spring, just the analogy that comes to mind. When we're stretching, we don't know how far it's going to stretch. Now, we're trying to find that point where we think that's the sweet spot. Of course we have a stop loss in place, of course we manage our risk, but where do we find that sweet spot? Let's worry about that in a second. When we have a bigger than normal move, for example, so ATR suddenly bigger than the 10 period ATR, showing that this bar is quite a big bar coming in. Short-term supply demand imbalance, that's what scalping is all about, taking advantage of that. And the stochastic is overbought, so we're saying, okay, we could consider that as a stretch kind of indicator. I'm going to say stretchometer there, there's no such word, but you get the idea. We don't want to do it in the middle of the range of stochastics. We want to wait till they're above 80. And then we want to wait till a 5-bar high to say this is like the recent high. So we're not kind of chasing stuff that's just where it's been before. So we've got kind of a few parameters we're looking at. Then we're taking a short into that. Now, what we're going to do then is we're going to use a target and a stop based on that 10 period ATR. So if the 10 period ATR is running at 10 points, for example, then we're going to say, right, it's a 10-point target. If it's running at 50 pips, it's going to be 50 pips. And it's a 1-to-1. That's the initial seeds and foundations of it. However, you can add more and you want to do 2-to-1, fine. There's ways to play with it. But this is a good starting point because I feel like when we're scalping, guys, the issue we have with scalpers is overtrading. If you're a scalper, you're going to go, yeah, you know what, overtrading is a big thing. So having some kind of filter, and you might think, you know what, this is not quite for me, but maybe I can use these filter rules and say, hey, when we're overbought, maybe I'll get in when we're oversold. I like matching the current range with the 10 period and see what's going on. Now I had this kind of coded up in TradingView and just kind of show you how this would operate, and this kind of shows you what you're doing. So you're waiting for the kind of high here, and then it's going short, and then it's taking the target here, it's going short here, taking the price off here, going short here, taking the price off here. Now you might want to tweak it and say, hey, after 5 minutes, don't hang around. This is just showing you the kind of how it all works. You've covered your short here, taking some money at the market. It's gone long here because it's gone overbought. We've got that stretched 1 period above the 10, back up, taking a few ticks out the market. Short here, taking a few ticks out the market. Notice it's not quite nice because it's weighted. It's probably got the signal earlier, but the stochastics haven't gone overbought. Bang, there's your signal. You've had to wait a bit of time here, but ultimately, what's that? 20 ticks out the market. Little shorts just triggered while I've been talking, and then you're out of the market here. So just an example, guys, and like I say, with all these strategies you have to manage your risk and add things to it, but this is a kind of good way of preventing over trading. Nice little way to trade the market under the right conditions. If you really like this kind of stuff, if you want to see more scalping, if you're a scalper, hit the like button, say, yo, I'm a scalper, what else you got? I wouldn't mind hearing some more bits you got. If you're not a scalper, stick around anyway, because you know what we do, always cover as much stuff as we can, always try to share as much knowledge as possible. I don't pretend to have all the answers, guys, but if I can share something that helps you out a little bit, then that's what it's all about. Take care, see you next one, bye bye.